You're listening to episode 205 of the Ambitious Bookkeeper podcast. Today, I have a guest joining me. You are going to be introduced to Adrian Lopez, an ex-IRS revenue agent. A while back, I actually did a podcast episode with another ex-IRS revenue agent slash auditor towards the beginning of my podcast, and I thought we were due to bring on someone again to talk about more things IRS auditing, especially as things have been shaken up in our world and the IRS world and everything lately. So I wanted to get someone that had been in the trenches more recently. So that's why I'm bringing Adrian Lopez on. He is going to share his experiences and observations from his time at the IRS in recent years. He is elaborating in this interview on his journey into the accounting field. He talks about the role and responsibilities of an IRS agent and is sharing some insights on common audit triggers and taxpayer mistakes. And so I know you're really going to want to listen to this episode, share it with your clients, all the things. He also emphasizes the importance of accurate bookkeeping, proper documentation, all the things we already know. Additionally, Adrian talks about his transition to starting his own tax and accounting practice. And in this discussion, we also cover the benefits of working with qualified professionals and maintaining client communication and the intricacies of different types of audits, such as those involving real estate and construction contractors. So if you are in the real estate niche or the contractors niche, this is definitely going to be an episode you want to listen to. And even if you're not, there's so much valuable information in this episode that we dive into. I cannot wait for you to listen in and take the notes and share this episode with anyone you think it's going to be valuable. So I'll see you on the other side in the interview with Adrian Lopez. Hey, and welcome to the Ambitious Bookkeeper podcast. I'm Serena Shoup, CPA, a mom of three, and I've been running a virtual bookkeeping business from my home since 2017. You are in the right place if you are a bookkeeper, accountant, or an accounting student, and you believe and know in your heart that your purpose is bigger than sitting in a cubicle. If you're ready to learn some actionable tips and strategies for starting and growing your accounting business, then I hope you stick around. Welcome, Adrian, to the Ambitious Bookkeeper podcast. How are you today?
Good. Happy Thursday. Thank you for having me on.
Yeah, in the middle of summer with kids at home and all the things. So we'll see how this goes.
That's right.
I was really excited I put out a call for an ex-IRS agent to come on the podcast because I had one a while back. I'll link that in the show notes. But Adrian here, you were an IRS revenue agent. What did they actually call you, I guess?
That's correct. So I was at the IRS. I was there for about 2.5 years in their small business and self-employed division. Basically, the dreaded field auditor. You know, they come out to your business or they come out to your home. So that was my role. So I did that for 2.5 years, auditing small business self-employed taxpayers. You know, people with rentals, landlords, brokers, restaurant people. You know, all sorts of different taxpayers from all walks of life. Yeah. So this is the fun part of the story of how did you actually get to that career position, I guess? Yeah. So but believe it or not, it was never my intention to be an accountant. Honestly, I actually wanted to go to law school way back when, and the cost of law school deterred me greatly. So I kind of looked around and I saw this thing, accounting and CPAs and all that. So I kind of went down that path instead. I got a master's in accounting. I worked as a financial auditor for the state of California. I eventually pivoted from there to go to public accounting and started doing public accounting tax. And I did public accounting and tax for about 2 years. When was this? This was back in 22. The IRS was hiring revenue agents, and I didn't really know anything about it. I never heard about it. And so I applied for the position. As you know, in federal government, it takes like 6 or 8 months to get a job. You kind of send the application, you just let it go, and we'll see what happens. And so I just kept getting through the steps. I was doing, public accounting tax season, working 50, 60 hours a week at a small firm over here in the Sacramento area. And eventually I did get the job. I had done the interview and I got the job, and they're like, hey, you want to come work for us? And I was like, as an auditor? Yeah, sure.
Yes.
I figured, not that I mean, public accounting and tax, especially, it's hard, especially when you're first learning and working at a boutique firm like that. And so I figured, okay, maybe now is my chance, now or never, to kind of find out what's the other side look like. What's that other IRS side? What's the government side? Everybody says, oh, it's a great experience, and you'll learn the system, you'll see behind the veil. And so I was like, okay, all right, so let's go do that.
And that was enough of a draw for you.
It was. I mean, not that I couldn't learn a lot in public accounting. There's a lot of really knowledgeable people in public accounting. I will say though, even professionals, other CPAs, tax attorneys, EAs, taxpayers are saying like, dude, that could be a good experience. Like, especially if you want to maybe have your own firm someday, that former IRS moniker is pretty powerful. It seems to hold just this credibility with the public, I guess. And I did learn a lot. They give a lot of specialized training. Maybe I could go a little more into that if you have questions about that. I don't know that any public accounting firm gives that kind of specialized training. I went to 4 phases of classroom training. You have to have like 3 exams each to pass. They teach you on C corporations, S corporations, partnerships. They teach you you have 2 different classrooms of 1040 training. I mean, they literally send you to a classroom for like 3 weeks. And it's like you have, to keep your job, like you have to pass these exams and you have to get to the objectives, and you have instructors and you have other revenue agent trainees there. It literally feels like a tax university, essentially. Yeah. I don't know of really any body, public accounting or otherwise, that does that. Yeah. I just don't. I've heard of Deloitte University and things, but I don't. So it was good training. I think it was good training anyway. Some people didn't like it, but I don't know. I passed the flying colors. I don't know if that makes me special. I don't think so, but
it means you're dedicated. So you joined the IRS in 2022. Mm-hmm. At the time of this recording, it's 2025. So what happened in between?
Let's see. I joined the IRS in November 2022. I went through all their phases of classroom training. I did dozens of audits, real estate people, landlords, restaurants. I actually audited a tax preparer. That was kind of interesting.
You audited the tax preparer's work, or the tax preparer's tax returns?
So I was lucky to do both, actually. They have a program where you do audit their work and their work papers. There's certain, requirements that tax practitioners have to have when it comes to, like, for example, e-file signature forms. You can't file a return on behalf of somebody without having that signed. And, there's a program where we go in and kind of take a look at, oh, yeah, show me your 8879s. Are they signed? Do you have them documented? Let me see your written information security plan, and you get to kind of tick off when preparers don't have that kind of stuff. And then I was fortunate to do an audit actually of a tax preparer. What's funny is he was filing tax returns for people, but he had been delinquent himself for like 3 or 4 years. And so, a colleague of mine got the case, filed a return for him, and then he's like, "Oh no, I'll file it. Don't worry." It's like, well, did you like 3 years delinquent?
What is that? Like, what are the ramifications of that? Because I know in order to get your EFIN and your PTIN and a CPA, like you have to agree that you are current on your tax returns.
That's right. That's correct. So long story short, from what I recall, he was not a CPA. He was not an EA. He was actually one of those unenrolled preparers, so maybe just a P10. Here in California, there is like a CTEC, a certified registered tax preparer, that you have to have, to be able to file returns here. I believe he had that, if I recall correctly, if my memory serves me correct. But yeah, he was delinquent. He hadn't filed. I think he was delinquent from 21 onward. And so we came in, we were going to do a substitute for return form for 21. And he's like, oh, no, here, I'll file it. Here it is.
Yeah, because when you guys do a substitute return, you're basically only claiming income and no expenses, right?
Essentially. Yeah. And so we were going to do a substitute for return. We kind of got started with that. He eventually started cooperating, gave us records, that kind of thing. And my understanding, don't quote me on this, we do have a return coordinator person at the IRS. Occasionally that person, assuming something was rising to the level where they could actually shut off your EFIN, that does happen. I don't want to speak, that happens often, but we did have a contact person at the IRS that, like, okay, if you're investigating a tax return preparer, say they're not being compliant, they're not being cooperative, that kind of thing, there is an administrative process to actually say, okay, look, shut off that guy's EFIN, he can't file returns anymore. Continue, trying to talk to him again to cooperate. I thought that was really interesting. I didn't know that, like, the IRS had a process for that. Basically, the modernized e-file system, basically is at the IRS's leisure. Like, they're not required to let you use it. There are regulations and requirements that they can impose on a tax return preparer, and they will shut off your EFIN if say, for example, you're delinquent or you're not cooperating, you're obstructing an investigation or an audit, that kind of thing. I didn't know the IRS I could do that.
Yeah, I mean, that's good.
I was like, wow, that's cool.
But in order for it to get to that point, you have to have already been in an audit process, or can people get to that point by just being reported?
My understanding is it's both. My understanding is the return preparer office, they do receive complaints from taxpayers, other professionals, that kind of thing. Hey, this person is, a ghost preparer. They're doing stuff they're not supposed to be doing. And the return preparer office, they kind of have mechanisms and goals for dealing or looking into those kind of preparers. It obviously, with staffing, manpower, it's hard to go after all of them. I would say if you're somebody who's getting a lot of different complaints, a lot of different referrals, probably you're going to be a person of interest. Sometimes it's a volume thing. I've worked on an Irish criminal investigation where we had a fraudulent preparer. He was filing like thousands of returns a year with false Schedule Cs, false Schedule As, false withholdings. And that was of interest to the criminal investigation division, I think, just because the monetary ramifications. Should I say if you're doing less than thousands of fraudulent returns, you're safe? No, I don't want to say that, but I think there's a it's hard. It's hard. Yeah, I can't say what they focus on, what they don't. I don't work in the return preparer office, but
right.
I really do believe, I want to tell you and the public and other practitioners, if you're seeing something that's not good going on, I do encourage you, submit a referral. Submit a form, fax it to where it's supposed to go, mail it to where it's supposed to go. If you and a few other people are doing that, especially over a period of time, there are offices of the IRS that are watching for that kind of thing, and they start, setting things in motion. I don't want people to think like, oh, it goes into the nether and nothing ever happens. It's like, it does. Those are good leads. Those are good leads for investigations of preparers and fraudulent preparers, ghost preparers. Those are good mechanisms. They matter. They do.
That is really good to know, because
we stumble upon things. Yeah.
Subpar preparers.
Yeah. I'm sure you got clients, you got people, with financials, this, then you're like, dude, what did this person do? And you look at the copies of tax returns and you see like, ooh, this was not good. This was not good. We've all seen it. We've all seen the shoddy work. Yeah.
Absolutely. So shifting into more towards, like, since our audience here are mostly bookkeepers and accountants that probably aren't preparing taxes, but even if you are, this is a great thing to listen to, or if you're wanting to prepare taxes, what are some of the things that you think were triggers for audits, for one? Because I know that's always a big question. Like, there's a lot of misconceptions of like, oh, if I file an extension, is that an audit trigger? If I'm an S Corp, is that an audit trigger? Like, what are some of the things that can trigger an audit? Or is it purely random?
I will say this is a hard question for me, because let me put it this way. I was very good at what I did as an IRS revenue agent. There was rarely a tax return that came across my desk that I didn't have adjustments for, right? Now, does that speak to the return or to me as a professional? Honestly, it's kind of hard for me to say. I don't want to put out there that like, oh, if you do these certain things, you'll be safe from an audit, or like, oh, you do these certain things, you're definitely going to be audited. There is a degree of randomness to it. I can't speak to, it's just hard. I never wanted taxpayers to believe, oh, you did something wrong, that's why I'm showing up at your business, that's why you got a letter in the mail. I never wanted that perception, because it's scary as a taxpayer. I wanted to be professional, and I wanted to educate the taxpayer on, look, this is how you do things better. This is how I can see here there's a mistake made here. It was always from like an education and a compliance perspective. I didn't want to like shake people down. I will say there were some things I started to see that were similar across all audits. Most of the time, it was either you had unreported income, right? Some 1099 that wasn't reported or something like that, a 1099K, a 1099 NEC. There was something out there that it's like, okay, that was kind of an easy pickup. It's not on the return when it should be. Okay. Other times there were, I will say, large expenses. Like when, for example, like a taxes line item on a return is like huge, but like there's like minimum wages. It's like, okay, so what taxes were those? Was it sales? A lot of times it was like sales tax. It's including gross receipts. You back it out on the taxes down below. Let's see. Sometimes operating losses. If you have a business with an ordinary business loss, Schedule C net loss, things like that. If it was like egregious or something, could, I would say could be a red flag. I don't want to say that it is. It could be a red flag. Those are always hints to us as revenue agents. Okay, take a look at those things. I will say also, particularly with sole proprietors and Schedule Cs, the IRS and their audit process and audit procedures has somebody look at what is called financial status. Can you pay your mortgage with funds out of your business? Can you pay, your grocery bill? Do you have enough money for your own clothes, for your car maintenance expenses, like all your personal living expenses, right? I will say that's something to kind of keep in mind, like just your sources of funds, cash, debt, credit cards, whatever. I've stumbled across tax returns where there's like no profit in their Schedule C business, and yet the person lives in like a $500,000 or $600,000 house, with like a mortgage. We can see the mortgage interest on there. We can see they're paying their property taxes, they're paying their homeowner's mortgage insurance and all that. And we just, it's not like I'm going to come and be like, where's the hidden income? It's just an indicator. Like, how exactly are you paying for all this? If your Schedule C has like no net profit, you know what I mean? Like little things like that.
Yeah.
Could be an indicator. Okay, maybe that person is at a higher risk of an audit. I understand as a bookkeeper, as a tax preparer, it's not your job to audit your clients.
Right.
It's just, that is something the IRS looks at. I think a lot of people don't realize that. They're like, oh, what do you mean? I have debt and I have loans and I have credit cards, this and that. And it's like, well, yeah, I get it. That's the business side. Do you have enough money to fund your mortgage? Can you pay for your kids' daycare? And then what the revenue agent's going to ask is, how? Explain it to me. Show it to me. How do you have the funds to do this? Because you're saying your business has like a net loss or barely breaks even. Where's this other stuff coming from? And sometimes it's nothing. Sometimes they do get gifts. They have loans. They have a high earning spouse. They got inheritance. You name it. There's always different explanations. Sometimes it's unreported income. I'll be honest with you. That's true. Unreported tips, say if you're a restaurateur. Honestly, I hate to say it, construction contractors, subcontractors, general contractors, do they get paid in cash sometimes? Absolutely they do. 100% I've seen it. Things like that. Like, we want to believe our clients, but it's sometimes those are key areas to kind of look into. I think it's going to depend on what type of client you have.
So that can actually trigger an audit because the IRS has, I'm assuming, some software that takes people's personal returns with their Schedule C and does some math and figures out like, okay, things don't add up. Is that what happens? Or are people like manually reviewing things?
So basically my understanding, I will admit, I didn't work in the return classification department. That wasn't something, they just gave me the work on my desk. I did learn a little bit about kind of how it works. You might have heard of like the DIF score, like the DIF system. Basically, I think it's called like the discriminant function system. So essentially, the IRS has like a data and tables of this algorithm, the DIF score. It'll assign a DIF score to returns. It'll even do it, I think, by zip code, by like city, by zip code of like, okay, we have Schedule Cs for, contractors. They're all kind of reporting line items in this range. Fun fact, we have one that kind of seems above the rest as far as DIF score. It's rated as higher. Just, it means, I guess my understanding is it means it's kind of a return of note. It's just different than.
So it's like comparing like industry benchmarks for different line items. It's like, oh, their wages are way higher than normal, or their meals are
that's right. That's my understanding of the system. And so the system will note, hey, this return is just different than the rest of them. There's a line item on here. There's something that's a little off or a little different. Occasionally, I think it'll even report, hey, they have a missing 1099. That seems kind of material. Maybe we should send that to audit. It just kind of handpicks a couple of these. It's not a perfect system from my understanding. Sometimes it'll pick a return that there's nothing there. There's nothing wrong. Going back to the selection process, my understanding is that it picks up these kind of couple returns, these returns, and that's sent to a classification team. Where you're right, a human will actually kind of take a look at it and say, okay, is this worth it to send to the audit team? Is that something that we should actually be spending our time on? Sometimes they'll throw it away. They're like, nah, it's not material enough. Don't worry about it. Maybe the gross receipts aren't enough, or there might be some obvious explanation on there somehow. Kind of depends. Kind of depends on what it is. For example, you might have heard under the Biden administration, there was kind of an objective to audit more higher income, higher wealth taxpayers, basically anybody with over $400,000 of either total positive income or taxable income, that kind of thing. So sometimes that would affect the classification's revenue agent's decision, right? Like, oh, small beans, this is too small. We're not going to audit that. Oh, we have another return over here. The guy's got $1 million. Maybe we should audit that instead, you know? That was back under the Biden administration. I think I saw firsthand the results of that. My understanding was the returns that I was given as both training returns and also helping colleagues with their returns. I've trained other revenue agent trainees on their returns. What I started to hear from some of the old timers, you know, the senior agents, is they're like, dude, the stuff that you're getting is like way more complicated than the stuff I got when I was first on this job. And I believe that might have to do with sort of, like I said, under the Biden administration, there was just this aim to go after sort of higher income, higher wealth taxpayers. And I have to imagine that's kind of the explanation of it. I did see more complicated stuff, you know, decent sized S corporations, you know, construction contractors, interior design people, people with like 30 rentals, you know, he's got like 2 LLCs with rentals and he's got this other thing going on. A Schedule C with like $5 or $6 million in gross receipts. He's like a contractor guy, you know. Just things like that, you know. A lot of the senior agents tell me that's just more complicated than what I got when I was, you know, when I was your age, you know. You know.
Yeah, and it could be a matter of too, like people are just getting more savvy to the tax loopholes or just like operating their businesses in more complex ways because there's people out there teaching some funky shit.
I believe that too. I want to believe. Let's be honest. This world is more complicated now with AI, with, you know, overseas sales, the different types of sales tax regimes and nexus rules and all that. The world is a lot more integrated, a lot more complicated. E-commerce is so much more prevalent these days, and so I think, you know, I want to believe that yes, you'll still have your sole props and your small mom and pop shops, but running businesses these days is just more complicated. And so I think the caliber of audits will just have to be higher. I don't know. You can go back to sort of the churn and burn, small mom and pop audits and be successful. I don't know.
Yeah.
It's interesting where the agency's going to take that, you know, with the shakeup at the federal government level. I don't know.
Yeah. So a couple of questions came to mind as we were talking. When you were auditing, once things were selected, you did mention that you saw some commonalities among the businesses you were auditing. And so was it the size of the business that was the common thing? Was it that what were some of the, I don't know, statistics, I guess, of the businesses that you audited and the commonalities?
I will say I did audit a lot of people that had either to do with like construction contractors or a lot of people that were involved in real estate. For example, the real estate participation rules and real estate professional rules are pretty complicated, and there's a lot of taxpayers involved in real estate that kind of don't meet those rules, and so they would come across our desk and we're like, oh dude, you did a cost segregation study and you have all this depreciation and you took it 100% against your W-2 income. Guess what? You actually don't meet the rules. So that was kind of a big tax bill for them, unfortunately.
To that note, there are firms that are specifically going after and helping people do these cost segregation studies. So do you think that created an influx of that?
Yeah, I think it does. I think because I understand cost segregation firms, they specialize in those studies and they want people to get the benefit of their depreciation on their buildings, whether it's commercial, this and that, whatever. I would caution taxpayers, like, look, the rules to meet the real estate professional designation, the election are steep I think for a very specific reason is there's a lot of room there for people to kind of be getting deductions and benefit to their taxes that maybe they shouldn't be.
So was that the result of a lot of the audits that you did, that you had to back that out? Or
Yes, it was, honestly. Yeah, I've probably given people bankruptcy inducing money because of some of that. For example, it might be a couple who's a doctor, you know, like the couple's a doctor, the wife's like a stay-at-home mom, or she like homeschools her children, and they have like 4 or 5 rentals in Florida managed by a property rental company, you know, or property management company, sorry. And they claim that they're a real estate professional, and she's like communicating with the property manager, and, you know, they sometimes she has to, you know, pay bills and this and that, and all that kind of stuff, or sign off on like a new tenants coming in or new tenants coming out. And they'll claim the real estate professional status, and there's depreciation deductions, you know, this and that, whatever, repairs and maintenance, you name it. And it's like, well, under the rules, that person probably did not qualify. They didn't meet the hours test. There's also, I don't want to get too much into tax law or anything, but there's another component where it's like you have to spend 50% of your time or more in a real estate trade or business that could include rentals. And it's like, well, you told me that you were a stay-at-home mom, right? And you homeschooled your kids. and that requires your time. That's like almost a personal service you're performing. How exactly did you spend more than half your time in your real estate business? There's little things like that.
That's tricky these days too, because like I know for myself, my profession is bookkeeping and accounting, but I do not spend more than half of my, I mean, it's like, it's debatable, like what is constitutes your time, because like of the time I'm working, I spend half my time on my bookkeeping business, the other half on the other business, but I don't, among the two of them, I don't work full time. I don't work 40 hours a week. So it's like that's the other debate of like there's things in technology these days that make things so much more efficient, but like I'm making a full-time income. Am I working full-time? No. So it's like how do you argue that too?
That's right. There's a lot of nuances like that, and that's why I encourage anybody who either thinks they qualify as a real estate professional, or they're maybe hearing from some of these firms that specialize in cost segregation studies, or we can save you taxes, or this and that, whatever. It's like, look, just please talk to a paid professional, okay? Don't let the cost seg people tell you that you can take these deductions. Don't let the cost seg people sell you this thing. Go get another second opinion from a certified professional about this, okay? Please. Otherwise, I don't want people like me coming across your door.
Yeah, that's really good to hear, because real estate is becoming
it's huge. It's
huge right now for just the regular people like us that are like
absolutely.
it's like another stream of income. Like crazy.
Yeah.
Crazy to think about. Never even considered.
I highly encourage taxpayers. Just, I get it. You guys want to pay your fair share of taxes. I understand, but please consult with a paid professional and be your own best advocate for yourself. Do the legwork and ask the questions from your paid professional. Okay, can we actually do this? Are we going to get myself on hot water? What's going on? You're going to have a lot of different professionals that are going to give you a lot of different answers, a lot of different. Some are more conservative than others. Some are more aggressive.
It's just like doctors. Like you've got to, don't just go around and ask for the opinion until you get the answer that you want. Go and ask different professionals their opinion, and actually the source of the law. Like this isn't just necessarily an opinion thing anymore. It's like the law. So it's like, don't just go to the person that is going to give you the answer you want. Like go to the person who actually has understanding of the law and what's acceptable, and like, know the risks.
Absolutely. Like I said, I would, I think I'm fortunate that me as somebody with my CPA and professional qualifications and experience and my training at the IRS, I am one of those professionals. I can't guarantee that your neighborhood, CPA down the street can answer some of these questions for you. That's why I really encourage taxpayers to be your own best advocate about what you do, what your business is like, what your investments look like, whether it's real estate, brokerage, securities, that kind of thing. I highly encourage them to be their own best advocate. Get out there, talk to paid professionals that know what they're talking about, specialize in that niche, and I think you'll be in good hands. I can't guarantee it'll be cheap though.
That's the thing. You get what you like. You get what you pay for.
Get what you pay for.
The whole triangle thing, where it's like you can get fast and cheap, or cheap and whatever.
Yeah. It's like fast, cheap, quality. Pick two.
Quality. That's the other one. Yeah. So you can't have all three.
It's true. There are no answers in life, only trade-offs.
So it sounds like a lot of the businesses, so construction was one of them. What was the trigger with construction? Was it a similar like type of thing that was triggering these audits?
I will say, like, for example, it kind of depends. If it was like if it was a more bigger contractor, general contractor, they had like a professional customer resource management system, a professional supplies ordering module in there. It tracked all the jobs, and their accounts receivable and all that, tracked it pretty good. Those were actually okay. Those contractors, I think they did good business. They did good quality work. They really spent the time and spent the money on a good bookkeeper, on a good customer resource management software, project management software for quotes and billing. They spent the money and the time on making sure that it was cool. I don't want to speak to say that every contractor isn't like that. I understand construction and contracting. It could be a volatile industry. Income can go up and down. Expenses can go up and down. Things can change very quickly. And I would encourage contractors and people working in construction, put in the time, put in the money that it's going to take to get all that documented and all the financials clean, the books up to date. You're tracking your payables and your receivables well, because it's easy for things to get messy in construction. You got subcontractors, you got contract labor for the day. Somebody wants to pay you in cash. They ask you, do you accept a cash discount? And you want to say no, but you're like, well, you're going to save me on the processing fee. I get it. I understand. I get it. There's a fluidity to things. I understand. Like I said, some of the bigger construction people, they did okay. Other small timers, there was usually unreported cash income. There was one gentleman, he got mostly paid by check. He did get some cash income, and what he would do is he had a church that he had tithes to. And so a lot of that cash income he would give to his church. And it's like, well,
a donation.
Yes, exactly. And so me and a senior agent, that I was working with, we looked at everything and we're like, dude, this ain't lining up, man. What you're telling me you gave to the church and what your gross receipts are, what your margin is on the jobs, like, dude, this isn't lining up, man. And we had no choice but to conclude, like, look, there's some cash income that's missing here. You don't even have contemporaneous written acknowledgments from the church about everything you gave. Like it was messy, like I guess that was kind of a unique case, but maybe not so much. I have to imagine a lot of construction contractors and subcontractors and stuff. Do they get paid in cash for the customers? Absolutely, they probably do. Like I get it. Customers and contractors, you want to try and save your client where you can. You want to get paid up front in cash when you can. I understand. When I get work done at my house, like, don't get me wrong. Sometimes they say no, but I'm like, look, man, you got a cash discount, and occasionally the guy's like, yeah. Yeah. It's just, you know what I mean? I get it. I understand.
Yeah.
So I encourage any taxpayer, please just do your due diligence. Keep track of everything. Pay a bookkeeper, pay a professional to do it, or at least to help you maybe, keep the books clean. It's important. You know as well, because you work with bookkeeping. That's your trade. That's your profession. It's important.
Yeah. Unfortunately, a lot of businesses don't understand that. That's another reason why I like recording these podcasts, because I'm like, this is one that will get sent to clients so that they can understand better, like, how important this is. One of the other things that you mentioned earlier on those, like, line items that trigger the algorithm is taxes being high. And you said sometimes it's sales tax. So is that, I personally know we have situations where our clients don't charge sales tax exclusively, so it doesn't show up as a separate thing on the invoice, and we have to kind of calculate it after the fact, and they eat the cost because of the limitations with their checkout feature or whatever.
That's right.
So we end up, that's where we reconcile the difference of when, things are not adding up and it should have been sales tax, and then they pay the sales tax, but we have to put it somewhere, right?
Yep.
So
Exactly.
So that does happen for some of our clients. Is that something that, as long as you can prove it, it's fine?
Yeah, for example, let me put it this way. I've audited restaurants that's exactly how it was, right? They're like, look, we'll figure it out in the back end. They had a POS system, and so they try to tie everything out the best they could. Were they the best at it? No, honestly, they weren't. So a lot of the times, that's what I would do, is go back to their POS system and their POS records, their dailies from the day of sales, and I'd literally just look at, okay, look, I'm going to total up 365 days. This is what your tips were. This is what your revenue was. This is what sales tax says it should have been. And a lot of the times I would tie it out to the books, and, honestly, it wouldn't match most of the time. Occasionally the sales tax, they actually should have paid more, and they should have remitted more than what they did. Oftentimes they deducted too much. They try to throw tips in there. There's all sorts of kind of little mishaps that happen.
Yeah.
So I would say, yeah, you gotta be able to back it up with some sort of POS system. How do you? One of the things as a revenue agent is my job was to understand, how do you make money? Walk me through it. I am a customer. I come into your restaurant. What system are you putting my order in? Where does the ticket print out? Does it even print out? Is it electronic? Is there a computer screen in the back? The cooks are cooking up the food right there, or just, bumping the transaction when it's cooked. That was one of my jobs. And we would come in and ask somebody, oh yeah, can you show me this in the P&L? Or on the POS system. Show me. Put it in order. Let me see the ticket that comes out in the back. That was how I understood people's businesses. And sometimes you would notice things like, oh, that's interesting. Oh, look at that. That's interesting. I think as long as you can back stuff up, or you have the backup, the source doc, whatever it is, the POS sales report, it's better than nothing. Because honestly, at the end of the day, I can't tell you how many times where, somebody doesn't have support for something, and our conclusion is just like, look, man, you're not entitled to the deduction if you can't back it up. Zero. That's just how it is. Like, okay, yeah, you paid money to CDTFA. Can you prove how much it was and what it was for? Like, without the proper documentation and all that, it's like, you know, sorry, dude. Like, how do I know this number's right? You know, you got to prove that. For the burden of deduction is always on the taxpayer. You know.
Yeah.
It's a steep burden at times. It really is. You know, I like I said, I encourage taxpayers and anybody with businesses, self-employed small businesses, you know, please do your due diligence. Have a good qualified bookkeeper, have a good CPA or EA helping you out. It's worth it.
Yeah, absolutely. Okay, so one of the other things too that I have a question about, last time I interviewed an ex-IRS auditor, we talked about some of the audits that came out like clean or successful, I guess, where there was minimal adjustments. It sounds like you had adjustments on every audit you had because you're very thorough. But if you could say that some of them came out as best they could because people were able to support the transactions and all that kind of stuff, what were some of the like systems that they used that were successful that made it easier, or any kind of like commonality among those?
The audits that most of the time I saw that were no changes, you know, everything was documented well. They had an up-to-date QuickBooks for sure. They had the bank reconciliations matching the balance sheet. They had AP/AR schedules that were timely. They weren't, you know, they didn't have super stale stuff. You know, everything was kind of categorized timely. I could sample a couple things. They could get me the invoices, the documents, you know, quickly. Had everything denoted on there. They could give me canceled checks if I wanted them. I mean, it makes a world of difference, especially when the P&L and the balance sheet tied to the tax return in the first place. Okay, you got a couple book to tax differences. Ideally, I have maybe the accountant's work papers anyway about what kind of book to tax differences there were. It ties out, hey, Schedule C net profit, we're good, man. Ties out, we're cool. I can rely on the books. I can test the books. Let me look at your bank rec. Oh, wow, matches the balance sheet. Cool. You know, nothing too old. Sweet. You know, your AP/AR is good. Invaluable. I really cannot tell you. You will make a revenue agent's day when you're like, dude, here's everything you asked for. Here's the GL. Let me know if you want samples of invoices or receipts. I can pull them up on my OneDrive right now, and we can go through them. I'll print them out for you if you want. Everything ties out. Everything's cool. You know, definitely separation of business and personal expenses is super, super awesome to see. You'll make a revenue agent's day, honestly. The easier you make, when the books are that clean, when the records are that clean, especially with like POS systems, you tie out your POS system, your year-end sales summary to your P&L, maybe a day or two difference because of deposits in transit, that kind of thing. They just didn't hit yet because the stripe didn't come through.
Yeah.
You're making someone's day. You know, honestly, matches the 1099Ks, you know, your sales tax returns, your quarterlies are good. We can kind of line up. Okay, we can see the debits and the credits. It's all cool. You know, you're making someone's day. That is a way, I'll tell you right now, that's a way to get a no change audit. I'm serious. You give the revenue agent what he asked for. You explain it to him. You let him know what he needs. You give it to him. Bank recs tied to the bank statement, which ties to the balance sheet. You're getting off good. It's cool.
That is really good to hear. I'm always telling my bookkeepers, like, always, always, always reconcile the balance sheet. If that is correct, and you can support everything on the balance sheet.
Absolutely.
Maybe categorizations are going to be wrong on the P&L, but whatever. At the end of the day, your net income should still be correct.
That's right. That's right. I mean, I can't speak enough to what you do, what you are helping other bookkeepers do is invaluable. It really is a life and blood of a business. I don't even know exactly how business owners make decisions without updated bookkeeping and accounting, right? They can't, you know, if you can't project your cash flow the last 3 months, you know, you don't have any data, historical data that's up to date. You don't have any reconciliations to rely on. How is it that a professional like me as a CPA and tax professional, how can I advise you without sort of the financial statements to help you out, you know? Yeah. Oh, hey, your expenses went up, you know, your COGS went up, you know, your profitability is kind of coming down. Look, revenue's down 3 quarters in a row. Without proper bookkeeping and proper categorization, I don't know if there's anybody that can help you. It's the blind leading the blind. You know, a qualified, well-trained, and experienced bookkeeper is worth their weight in gold, you know, especially somebody who understands both the tax and accounting side. Hard to get.
So let's circle back to what you said about separating personal and business. So I'm assuming you had audits where there was a lot of commingling. Like, what are the actual ramifications of that? Was the commingling actually them trying to write off personal stuff? Was the commingling just creating a mess, making it really hard to figure out what was in the books versus not? Can you walk me through like what that actually resulted in?
It was one of two things. Either there were personal expenses in the business, and we'd sample stuff, or we'd ask for stuff, receipts, invoices, whatever, and they wouldn't get the deduction. Basically, oh yeah, you pay for your kids' daycare through your corporation. It's not a deductible expense. Sorry, you don't get that. Other times it's like, okay, not only am I going to deny the deduction, guess what? I'm going to hit you with a dividend on your tax return because you're a C corp. So now you're paying, and especially if their taxable income was high, I'm like, look, dude, you're paying, your long-term capital gains rate plus NIT on that, in addition to not getting it on the corporate side.
You may as well have just paid yourself the salary. And
it happens. It happens. That was one thing. Sometimes it's like, okay, the books are generally reliable. Some commingling will deny the deduction. Sometimes you had to put a dividend on their personal return. Okay, they kind of get it. Yeah, my bad. Shouldn't have done that. Sorry, I don't have the backup for it. Okay, maybe it was personal. My bad. I get it. Sometimes it happens. Some taxpayers were more intentional than others. Honestly, I'll tell you right now. I'll be perfectly transparent on this podcast. I have seen some commingling and looked the other way and just let it go because it was immaterial.
Yeah.
It's the truth. If I have a business with $2 million in gross receipts and they have $300,000 or $400,000 in ordinary business income, okay, and I'm saying $2,500 or $200 or whatever in a personal expense, it's like, look, am I going to really make an odd adjustment over that? It's not worth my time. It's not worth my time. Other revenue agents would be different. For me, I'm like, look, it's not worth my time. Whatever. I got bigger fish to fry. Okay, why am I going to spend my time, spend my resources on auditing this person? You already got $300,000 or $400,000 ordinary business income. They already did estimated tax payments. They've already paid a lot into the system. Am I going to spend my time trying to get a $2,500, $5,000 adjustment over this person, or over here I got somebody who, I could get $100,000 out of them. It's just that's what the service is paying me for, is materiality, right?
okay.
Small fry, big fry. It's just what it is.
That brings up another question I have then, about what is expected of the revenue agents as results. Like, are you guys expected to recover a certain amount of revenue, or how does that work?
It's a great question. I think it's actually something that a lot of people don't know about, don't understand. So believe it or not, I was not allowed to have a quota. There was no number of dollars per hour that I was required to get. They're actually not even allowed to do that. It's in federal statute. You cannot judge a revenue agent's performance. You can't impose those kind of requirements on them. I couldn't be expected to, you got to, generate $500,000 this quarter. You know what I mean?
Right.
They cannot put that requirement on you as a revenue agent. You have to charge a certain amount of hours per case a month. They want to see case versus non-case time. Kind of like public accounting, you could be expected we want case time. You know what I mean? Those kind of quotas, could be expected of a revenue agent. But as far as dollars per hour, whether you're getting payment on your agreed examination reports, for example, most of my audits were agreed. It's very few that went unagreed or went to appeals. But I will say a lot of the taxpayers didn't pay me right that second. We were always required to ask for payment. We couldn't compel them for payment. It's
okay.
look, my job is for the examination. I would tell taxpayers, look, you don't have to write me a check. I'm not a collection officer. I am here to assess the tax. That's somebody else's department.
The longer you wait to pay, there's going to be more penalties, right?
Yeah, I'd always tell them, look, man, you got interest, you got penalties, it's going to keep going. But look, if you don't have the money to pay me, you don't have the money to pay me. I'm not going to, that's fine. Here's the adjustments, this is what they are. And a lot of taxpayers didn't know that. They're like, dude, can I set up a payment plan? I'm like, absolutely you can. Yes. We have a whole department that does that. Here's the form, here's the resources, But no, couldn't, we don't have quotas, nothing like that.
Was there a culture of expectation though?
And here's what's funny here's what sucks about that question. It's going to depend on who your manager is. It's going to depend on where you work. Okay. Because I can tell you right now, the IRS office in Houston, Texas is going to have a very different culture than the one, say, in San Francisco, California. And the one in Oakland, California is going to have a very different perspective than the one in Miami, Florida. Right? It's gonna really depend on what office you're in, who's staffing that office, what the senior agents look like, what managers are there, what senior management looks like. I wish I could tell you there was a standardization. There just isn't.
What about for where you were at?
So where I was at, I will say there was a more, I don't know how to call it. What's the way that I would put it? It wasn't so, I don't know, cutthroat kind of isn't the word that I want to say. Don't get me wrong, I think a level of friendly competition among revenue agents is important, but at the same time, it's like, look, we're not shaking people down here. Just because you stumble upon an audit adjustment does not mean it's our job to shake down the American taxpayer. That's not what this is. We're helping people be compliant with their tax obligations and ideally educating them on how to continue to comply with those tax obligations, educating them on, look, you need to get a better preparer. You need to get a better bookkeeper. You got to do this way. You got to do that way. That was always my perspective, was trying to educate taxpayers. I will say my CPA license helped a ton with that. They found me very credible. Other revenue agents who had no certifications of any kind and maybe some person straight out of school, I get it. It's going to be different. They might not listen to that person the same. Mm-hmm. That's just, I get it. That's how it is. I understand. No, and nobody likes to really talk to the IRS anyway. I get it. I try and do my best to kill them with kindness. I get it, though. People are skeptical of me. But
did they put you through like soft skills training for that?
Oh yeah, 100%. Yeah. So they did like interview workshops. We did like a fraud symposium. Talking to somebody who was, the subject was supposed to be somebody who was either accused of fraud or you're pursuing like the civil fraud penalty against them. How people could delay or obstruct your examination or your questionnaire, that kind of thing. A lot of soft skills training like that.
Yeah.
Sure.
Interesting. That's cool. I have so many questions. So
I know, go for it. I'm happy to answer them. Seriously, it's cool.
When it comes to like, because I know you mentioned you had like some C corporations that you audited. Did you audit a lot of single member LLCs that did their own bookkeeping, or did most of your audits, they were big enough where they would have had their own bookkeeper? What was that like?
It's a very good question. I would actually say, if I had to give an anecdotal ratio, I think 1 and 2 did not use a professional. I'd probably say 1 and 2. I did audit a lot of single member LLCs. A lot of them, honestly, were big adjustments. For example, I had this one gentleman, he was like a cybersecurity. He handled like video cameras and cybersecurity for casinos. And he did some day trading, and he kind of struck it big during COVID, a lot of kind of stuff like that happened. The capital gains, short-term capital gains, unfortunately, ordinary rates, and he was doing well in his Schedule C business and that kind of thing. And there was some stuff that kind of fell through the cracks. And he didn't have a professional. He didn't have a bookkeeper. It was just him. So as soon as he kind of got the audit letter, he actually ended up retaining a tax attorney. But he didn't work with a bookkeeper, nothing like that. And other times it was, believe it or not, actually some of my biggest adjustments were people with the preparer, with somebody doing the bookkeeping and the sales tax returns and all that. It's just they were done wrong.
That's what I was afraid of.
Yeah. Like I said, that's
stuff that I've seen come to my firm from previous bookkeepers and talking to other bookkeepers and the messes that they're dealing with, all the cleanups that we get. It's like, there's a lot of professionals out there that just are lacking the training, and it's unfortunate.
I will say, I want to speak to that point. This is what I observed. I can only speak from my anecdotal observations in the field. It wasn't always that they lacked the training or the qualifications. It's that they had too much volume. They were trying to do too much. They didn't have the staff. They themselves didn't have the time. For example, I audited a Mexican restaurant, and their preparer prepared a C corporation return for them. Not one line item on the balance sheet of the P&L matched. Not one.
How do you start the return without the balance sheet?
Exactly. I asked the preparer. I was like, dude, none of this matches. All I'm seeing is a C corporation net ordinary loss. The balance sheet, the P&L does not tie. What did you do? And he's just like, oh, my bad. I don't even have the original work papers. Like, I can't find them, And so I was like, and I asked the taxpayers too. It sucks. I asked the taxpayers. I was like, did you guys review this before you signed this 1120 tax return? And they told me, they're like, we didn't. We thought it was right. We trusted our professional. We just signed. Signed. That's all we did. We signed. We gave the guy the check. We thought he was doing it right. I didn't review it. And I'm like, dude, So that was a big adjustment.
Yeah. So that's the takeaway of like, if you are working with your clients before they sign their tax, if you're a bookkeeper listening and your clients are working with a tax preparer that is preparing their taxes, ask them if you can just review the tax return before it gets signed so that you can help them tie it out and make sure it matches what's on the books, or you understand what the differences are.
Yes, I would absolutely encourage that, honestly. This is why I say again, I have to encourage every taxpayer, every small business person, every self-employed person, you got to be your own business advocate for that kind of stuff. Ask about a review of the return with the preparer, make sure you understand what's on there, some of the book to tax differences. because you'd be surprised, I think, where either mistakes are being made, stuff doesn't tie out, or stuff, it doesn't make sense. And ultimately, the truth is, the IRS will hold you as a taxpayer responsible.
That was going to be my next question. Like, what happens in that scenario?
I will say, so for example, when we talk penalties about this Mexican restaurant that I had to audit, they requested penalty abatement. Okay, they said, look, we relied on a professional. We thought he was doing it right. We were paying him substantial fees to do it right. We thought he did it right. Can you abate this? And I had asked my manager about it, this and that, and we ultimately concluded, no, we cannot abate this. And here's why, is because you guys admitted to me you didn't review the return. You didn't sit down with the guy. You didn't look over the P&L, the balance sheet. You didn't understand financials or differences from last year. You didn't ask about book to tax differences. You didn't look at this. You told me you just signed and paid him. And we're like, to us, that does not establish reliance on a preparer and is not a reasonable cause exception. You know, ultimately, the taxpayer, you have to show ordinary due care and prudence with your business, with your tax return. This is a legal document. You have to be your own best advocate. And don't get me wrong, there are a lot of preparers that do wrong. They give you bad advice, they do it wrong, they take aggressive tax positions, absolutely. There have been times where I've abated penalties for that too. The taxpayer, it was through no fault of his own. He relied on somebody and they took an aggressive position. But for something like that, where the taxpayer admitted to me, he's like, look, I didn't review it.
They basically admitted negligence.
And it's like, look, man, that's exactly what that penalty is for. You know, unfortunately, you know, I know, I felt bad having to do it. Like I said, I asked my manager, and he's just like, nah. You know, and my manager, it's not like my manager was trying to like shake people down. He's like, dude, look, they failed on these aspects, and I was like, yeah, they did. It's just, you know. And that's the duty. That was one of those hard responsibilities and duties as an IRS revenue agent, is I have to serve the American taxpayer. If I was to let somebody off the hook for something like that, your honest taxpayers are the ones who eat the burden, right? The burden of the tax is on their shoulders. You know, it's a hard job. It's a hard job at times. It really is. I learned a lot. I met a lot of interesting people, but it is a hard job.
So overall, how long were you a revenue agent?
A little over 2.5 years. 2.5
Okay.
years.
You're like, and that was enough. And now what are you doing?
So I will say, as you've heard at the federal government level, there's kind of been a shakeup. I probably would have liked to stay at the IRS. It's just that with the change in administration and sort of the downsizing of the federal government and of the Internal Revenue Service, I kind of saw a little bit of the writing on the wall. I hadn't been there that long, and there's a lot of other agents that have a lot more tenure than me. And so if there was to be some sort of reduction in force or some sort of layoff, there was in my office. I wasn't affected by them yet. So I kind of made the decision, okay, look, is it time for me to move on? And so I eventually decided, yeah, I should. If I had more tenure, I would have probably liked to stay on. I think it's a good job. I learned a lot. The work environment's changed with the change in administration, unfortunately. But I would like to stay on. But at the same time, what I keep hearing from people is there's a lack of qualified CPAs. Everybody, their CPA died or retired. And so you asked, what am I doing now? So I decided to try and hang up a shingle and establish my own tax and accounting practice.
Awesome. So there's lots of bookkeepers listening right now on this podcast that always need a good referral source of tax. So you are based in California, correct?
Yeah, Sacramento area, Northern California.
So does that mean that you focus mainly on California clients, or what is your mix of like what you're able and willing to do?
Yeah, I mean, I'm pretty much open to anything. It is a virtual tax and accounting practice, so I like to work with people, all over the United States. Honestly, any experience with multi-state taxation, all that kind of stuff is helpful for me. I can freely admit that I don't know everything in the world. What I do know is how to go figure out and get the answers to do the returns right and to offer guidance on people's taxes, their businesses, advisory, tax planning. I'd like to be of service to anybody who could use the help.
Awesome. So good to hear. We need lots of good tax preparers as referral sources. I can attest to that in my community. It's always a question like, who are you sending people to for taxes? Because we're all, bookkeepers. Most of us don't also do taxes. So
I appreciate that.
So yeah, that's really good to hear. Where is the best place for people to connect with you? I mean, I connected with you on Reddit, but that's all kind of anonymous.
I will say, I mean, I'm on LinkedIn. I'm sure everybody has a LinkedIn, and then just my website just kind of has a small spiel about me and my pricing, my services. So www.anlcpa.com if anybody's interested.
Awesome. We'll link that in the show notes.
See, it's easy to find me on LinkedIn. I'm lucky there aren't too many Adrian Lopez CPAs running around, so I usually am the first hit.
Awesome. That's so good to hear. So make sure you connect with Adrian. All right. I was going to ask you one last thing as like you're kind of new in your journey, sometimes what I do when I have a guest on is if they're not an accountant and it's like some other kind of business owner, I ask them what is like the best piece of advice they could give a bookkeeper that, or something that they really love about their bookkeeper. But you're not really in that position, and you're newly out on your own. How long? Like a year-ish?
No. I mean, literally like last month. Yeah, my last day at the IRS was like May 2nd. Yeah, so I've hung my shingle in the last month.
So it wouldn't quite fit if I asked you to give others advice who are just starting out, unless you have something that you've found already to be a super huge help. Maybe it is your experience in the IRS.
I will say the one thing that I keep hearing from people, I've consulted with a lot of people about taking this plunge. Everybody's told me one of two things. Either we need more qualified CPAs, mine retired, mine died, whatever. Or the number two reason I hear is I can't get my person back to me. The guy doesn't have the time to schedule a call. The guy doesn't have the time to return an email. I gave him my stuff 2 months ago. I haven't had a filed return. He hasn't followed up back with me. I can tell you, based on my communication with other professionals and the public, I've been kind of trying to do networking and that kind of thing, talking to business owners. That is a key thing that I keep hearing is I can't get in touch with my person. They can't get back to me. They're too busy, whatever that is. I would encourage any professional, especially a bookkeeper, tax professional, and accountant, start taking note of that. Client service and a lack of responsiveness is really starting to irk taxpayers. I'm trying to do my absolute best to not have so much volume that I can't get back to my clients within, a day or two at the latest, especially if I'm doing someone's bookkeeping and accounting. That high touch service I think is really, really important. I think the lack of qualified professionals is, I understand it's making it difficult, but I can see that the public is starting to take note of, when professionals can't get back to you.
That's been a common theme for a long time, and I don't want to go too much longer because we've already been recording for an hour. But one of the things that's coming up a lot for bookkeepers is the fear around AI taking over a lot of stuff. And it's like, we forget how valuable we are in just communicating frequently and proactively with our clients. So if that's the one thing that you implement or do better, like that's going to be your job security.
I agree 100%. 100%.
So thank you so much, Adrian. It was a blast having you on the podcast. I know this episode's going to go like viral. I'm just going to call it right now.
Round 2, whenever we get a chance.
Absolutely. I know I probably have so many more questions. So yeah, if you're listening and you want to have Adrian on the podcast again, or maybe we do like a live Q&A session or something, that would be really cool. Thank you so much for taking the time to share with our listener, and I hope you have a beautiful day.
You too. Thank you so much. I appreciate you having me. Thank you. You take care.
Thank you to everyone who helps make this podcast possible. Content and interviews are produced by me, Serena Shoup. Our intro and outro music is written and performed by my brother, Ian Gilliam. Editing is also by Ian using his awesome sound engineering skills along with Descript software. Hosting and publishing is by Buzzsprout, and you can check out the show notes for links to all of these amazing resources and resources mentioned in the episode.
Be ambitious.